Yo, what's up? It is Tuesday, 10 a.m. Eastern, and we are live streaming financial modeling. Uh, so, as you probably know, we're working on the original SaaS template from SmartHelping.com, and we did a lot of formatting upgrades yesterday. We added all the tabs for the three-statement model. We added the cap table. I also figured out a much easier way to import. So I have a base three-statement model that I'm using that has a lot of the logic in it. So I just paste each of those tabs into here. I figured out a very easy way to do that and update the references just by using find and replace. So check out yesterday's video for more on that. But it's going to make this whole process that I'm doing with updating all the templates with the three-statement model much faster. uh, so before we get started, uh, don't forget to subscribe, like the video, check out smarthelping.com right over here. All kinds of financial models, all different categories. I've got hundreds I've built over the past 5 years, and I'm continuing to build. And don't forget, you can get models. You can buy all the templates on the site for $849, or you can get bulk by type, which they're all labeled here, mid-level or intermediate, or you can buy by category as well. Uh, and don't forget, there's all the way at the bottom, there's a personal finance one that I added that's got a lot of stuff with mortgage, home savings, loan payoffs, interest rate swap stuff. So some good value there. Human resource logic or templates. A lot of that's in Google Sheets, general business tools, KPIs, sales pipeline trackers, real estate, accounting, all these industries. These are all the templates we're updating right now with the three-statement model, as well as all these SaaS models. It's going to take like 8 months, probably. But today specifically, we are, this is the most popular template we're starting with, the 5-year SaaS standard. This has had a bunch of updates over time, but not really to the degree that we're doing now. Now we're kind of really taking it to the next level from what it was based on essentially the last 5 years of modeling every day. I'm I'm going back and facelifting this whole template. So we'll see how far we get today on it. Let's do a quick make sure my sound and visuals coming through, and then we'll get started. Today we're going to be doing balance sheet and cash flow statement, and then some just general updates, checking, making sure everything matches, some sanity checks. Uh, I mean, we might, I don't know if I'll finish it today, but we might, which would be cool. Now, this was a pretty simple one to do. The more complex ones are going to be like the enterprise SaaS, that's going to be crazy. Uh, the manufacturing template I've got, a 10-year operating model, that one is going to be like manufacturing plant. That one's going to be insane. Like some of those might take me multiple weeks to do. Okay, sound's working, audio, visuals working. So here we go. And remember, I am streaming every day now, not just once a week. I'm doing this stuff every day at 10 a.m. Eastern, or Monday through Friday. So that's a lot more content than I've been, and hopefully, I want to do it. I like doing this stuff, so hopefully that helps also grow the audience, and it's going to allow me to put like all this extra time and hours. I'm not raising the price of any template. I'm just adding um, financial statements, formal financial statements and cap tables to them all. So they're all getting better. I'm not removing anything. and I'm doing also some minor upgrades to some of the what do you call it, the conventions, formatting and kind of timing conventions to make the models just better, easier to use, clear. Alrighty. Well, where did I leave off? So we got income statement. This is all updated, matched. Let me make sure we have a check in here. So let's just check the sum of the net income minus sum of the monthly net income. And this is just to kind of make sure reference errors have not happened and all the math is the same on both. All right, that's a good check. So balance sheet, oh, it's so nice that all these date references are all already automatically working. That was so annoying on the first conversion we did last week. So, okay. And with three statement models, it's a puzzle. It's like you have to do one piece on one of the statements, and then that flows to the other piece, and then you have that. And when you're building it from absolute scratch, it takes even longer and it's even harder. Having a template to work from is makes it a lot better, and um, that's why I'm using my a base template to build in here. And I sell that template is available for $45. The general three statement model. I think over on SmartHelping.com right here, and I actually offer it for free with the purchase of any template as well. So this is what I'm using to do all these with. Check. All right. Well, we're gonna go then. Let's do cash flow. Oh wait. I thought I had to update something real quick before I forgot. Yes. This needs a data validation uh, for these to pick the month that these capex items happen. Where am I going? I could use this for the validation list. Okay. Clear our colors out real quick. And then this automatically flows through to, it should be flowing through to the depreciation should be flowing automatically through the income statement, and then the cash expenditures will flow through to the cash flow statement. And this model is, I mean, we're now adding functionality for uh, capital gains or loss. So you can actually, this will calculate the book value at sale against the actual, and this is only relevant if there's an exit and there's proceeds, and you can define the percentage of that is applied to all of the fixed assets, which we're only doing 15 here. So it's not like, and I'm not doing anything more in depth than that for models where the primary business is not fixed assets, like a manufacturing plant or something. But if every business could have fixed assets, so this logic is here for that purpose. come on. Underline formatting. Google Sheets has done so much better of a job with this, with the formatting. Excel kind of still it's a bit clunky. Okay, it's doing this stupid draw thing. I hate that. Can we just, oh, all right. It's gonna be all light. Line style light. Not gonna try to make it all fancy. There you go with that. I'm just gonna bold this because this top row is supposed to be separate. Or this is not to be changed. It's for the building only. Oh, and these are all editable, so update the convention here. Light yellow with a blue text. And all of these are also editable. I have a useful life in here is 0. Okay. Try one more time to get this. All right, perfect. We got it. Now I got to switch back. See, it makes you pick it, and then you have to select, and then before you start doing anything, it'll be in the draw mode. So you got to actually click like the middle of this grid here, and then it's ready to use like the different styles and lines. Took me a while to figure that out actually, and it's important for modeling, formatting and stuff. Now, this is all updated. Let's make sure, are these staggered? Yep, perfect. That means the logic is working. Now we can go in. Let's look at the cash flow, and I'm going to do the monthlies before I do anything with the annual on the income statement or on the cash flow statement. So cash flow from operations. We don't have inventory. On this, so this is taking, let's see, this reference might already be there. So row 11, what is row 11? Total income. Yep, that'd be total receipts. Other operating expenses. Ooh, that might, so 63, 15, and 16. And we'll know if we balance or not because if the balance sheet's not matching. And that's one of the hard things, but it makes it nice in the end is with the 3-statement model, you are able to see everything matching. And if the balance sheet doesn't match, you know there's something wrong with something. Because of the way the formulas are interconnected, it forces you to be accurate. Okay, what did I say? 63, 15, and 16. Yep, so this one, and then 15 is this, and we don't have anything at 16, but that's fine. I don't know why we don't just do 18, but it's okay, it's the same thing. Interest, 69, I think that's already in there. Yep, that's a negative value. And taxes is in there. Now we know, so I'm not getting overly complex with this, but you know that taxes often are just paid quarterly, and it's there's so much complexity with taxes. So all I'm doing is just basically saying we're calculating what the annual tax is based on some assumptions on tax rates and if there's net income or loss. Only if there's a net positive net income, there'll be taxes. And we're just amortizing it for 12 months for the year. So we're saying that it comes out every month, even though we know it's likely, this is probably aggregating every quarter, and you're not paying taxes for 2021 until 2022. We know that, but the point of the financial forecast is just to show, look, that money's coming out. The timing of it could vary, depend on all kinds of different things, but we're just saying that somewhere we have to account for um, that that uh, that cash outflow. Like I could go in, I don't know, do I really don't want to get into that granularity, but we could do some kind of tax schedule, or what you could do if you really want to get into it, you could go to the income statement annual, look at year one, you could manually input the taxes. If you know what this calculation is, you could say, okay, 47,000, and then you could go in and say that's going to be paid um, in each quarter. So you go into the income statement monthly and say we're paying taxes for that in, clear out year one. You're not paying any taxes in year one, and then start in the first quarter of year two and put in a tax payment. I've never seen a financial model get that granular. It's often just, are you accounting for taxes in that year based on if you had net income or loss? So, that is that. A lot of people will not even put taxes into a financial model, and that's fine. You can always zero out the percentage and just have no taxes. Uh, I see that a lot, like very few, because taxes are so complicated and the value, you have no idea what it might be. It's so hard to account for it. I put it in here just for the academic case of, showing, there's going to be some more cash outflow for that at some point. Okay, so we got net cash effect of operating activities. We have cash flow from investing activities. So this is our CapEx happening, staggered every month. That's good. Sale of the business. Okay. And depreciation. So this is where we actually get the total cash flow from the exit. And then remember, we're accounting for some of that income based on the cost basis of the fixed assets. And that's actually going to be taxed at a capital gains tax. So again, that's more of like an academic thing, but it's like trying to show you potentially when you sell, if you sell the business. Now, if you hit NA for the exit month, then none of this, it's all zeroed out. But if you have an exit month defined in an exit valuation, a multiple on the annualized revenue, this pops in here, and um, and there's basically a tax rate you can apply to any gains on the fixed asset based on the assignment of the um, sale to how much of it's going towards fixed assets versus other comprehensive income. So you've got net effective investing activities. Um, Now, with this, let me see what I'm doing here. B7. I thought I had some debt in here. What's going on? B7 and B3. Ah, is this? Let me double check. What's my start year? 2021. Okay. This is 2020. D1. Ah, D11. Why is D11 blank? I don't know why. Oh, I know. I did this reference. This should just be referencing this. Since we don't have anything in row 11 for inventory. There, that popped in. Perfect. So we got our cash proceeds if we have any taken out debt. Principal payments. That looks right. So cash in, cash out. And then this, okay. So I need to this I really need to update this logic in the or use the debt schedule from the so this was what was already in here. We're gonna have to update this. So we need a exit date, which is gonna be whatever exit month you choose, and if it equals NA, then just if this equals NA, then blank, otherwise this. And then this is going to be used to figure out when that principal payment gets, when the rest, like if you pay off it earlier than it's due, that will define that as a principal payment. In the P&L details, the monthly and annual, I just show it as a separate row, but for the three statement model, I need to show it within the amortization. Where are we? What are we doing? Date. And then I'm going to actually have to pull up our last model well, no, I could pull it up on here. Well, no, let's pull it up on the franchisor licensing one. I just want to check what we did exactly so I don't have to think as much. That's another benefit of templates, less thinking. All right, so we did it starting in period 2. So I think here it is. If the date there equals our exit, then do the previous principal balance plus the interest for the period. Otherwise, just do the formula that was there. All right, let's try and do that. So where are we? Row 13. Yep, second period. And then we're just checking if this equals this. Yep, that's right. Otherwise, and then we just drag this down and we should see an exit. Yep, perfect. Perfect, perfect. You can see total principal paid back is obviously the principal borrowed and then the interest. Okay, good. So now watch what happens when we go over to, in this, let's see. So we go over to cash flow. Now you can see the principal is hitting that last, yeah, there it is. And then the debt balance will drop, but we'll get to that on the balance sheet, the debt account. Principal, proceeds, sale. Okay, yeah, we're not doing dividends or this. No need. That just complicates it, overcomplicates it. And remember, once I'm done with all the reference updates and all the monthly and annual, I will go through and clean up all these empty rows so it looks nice and neat and also group everything together. So you can hide and unhide if you just want to see the high level details or not. So there's net change in cash. We don't need any of these supplemental schedules. We're not doing dividends, and we already show on the cap table each individual piece of equity that everyone has, and their share of distributions will flow. Oh, I forgot. So on the SaaS model, this was before I started doing the discounted cash flow analysis on the contribution with its own contribution distribution schedule. So we're gonna add that in to this, and I can't remember if anything else. Let me see. There is an executive summary distributions. I think, was there any other summaries? No, I guess that was it. So just the distributions, and then and we'll have to link all that up with the cap table. So cash flow statement monthly is done. Let's go to balance sheet now. This is the hardest part. Let me check some real quick. Okay. So hardest part, cash. What this is doing is looking at cash for the first period based on whatever's happening in month one, and then it's looking at what happens month two and adding that with whatever happened in month one. So this is your running cash balance. And if it's negative, that means not good. Now, well, hold on a second. Where did we do? What did I take out of here? Because we have to do cash proceeds from equity investments. So sale of company stock, that would be what that is. Selling the shares. And let me see. So this is referencing down here. We're just gonna have to manually do that. And that's always gonna be in the modeling that I'm doing, this is always gonna be period one, because we're doing it, if you're raising money or using this for a forecast, you're essentially saying, okay, over the next 5 years, what's happening and how much are you raising right now? And if you've already raised money, that will just flow into here as a starting balance, which is fine. You just put on the cap table all the different investors you've had and how much proceeds and what their share is. So what we want to do is show, I remember. So I'm structuring this as insiders and outsiders. So outsiders would be like third-party funds that are investing in you. Insiders would be like investments that have come from the operator, founders, or possibly employees. And I'm not doing all 40 different slots on the balance sheet. I'm just doing the total of those two as separate items. So this would be total for, and actually, just so I can be consistent, I want to see what I labeled that as on the franchisor one. What did we label that as? Oh, did I aggregated it here? Okay, so I aggregated it here, and then I guess on the balance sheet, I separated on the balance sheet and the owner equity. Okay, that's fine. So keep it simple. So on the cash flow, we're adding both. So that'd be C31 and 55. So any money that's coming from anybody investing in buying shares goes there, and then this is just 0. Make sure this is cleared. And again, we don't need any of these. Okay, now our cash balance. Because I saw and this is why the balance sheet is good. I saw the cash balance on the balance sheet was negative, and it shouldn't be because we're solving for um, the negative cash needed on a monthly basis. So the cash balance cannot ever be negative based on the logic we're doing here. All right. So principal. Okay, now if we go over to the balance sheet, yep, there we go. So you can see the cash balance is here, and then yeah, it should never be it should never be zero. And that we're solving for based on the minimum, our monthly P&L detail, the minimum cash balance that we got. And all this stuff will reconcile, and we'll be doing checks on that later, but the monthly P&L will have to match the income statement, balance sheet, cash flow statement. So in here, we're not looking at um, equity. There's no equity contribution in these calculations, so it's just the cash balance of the project, assuming it has no equity. So you can see we take the minimum ending cash position, and that's what we get for contribution needed. Now, what? Just look. Let's look here. So cap table, we need 16. We got 1662. Yeah, because that solves for anything remaining. And again, if you want to reserve, you can go into the startup cost, put a reserve in there. I'm actually going to zero this one out. Actually, put it like 250,000. So now we only need 900,000 in this scenario. So we need 900, or we're getting 900 in. If we go to, let's go back to that P&L detail. These are like the hardest part of these models is usually the cash balance and also just not double counting anything. So startup costs. So 912 looks like the most we need. So when we go over to the cash flow statement, you can see that amount is coming in there. That's the minute we needed. We also have some operations happening in financing from the loan. So net change in cash, and that goes over to the balance sheet here. Now I'm thinking, so in my head, if you put in that equity and then you run up, like we're missing, I feel like we're missing. Let's see, net change in cash is a positive 999. We're getting this. Okay, customer receipts. I feel like we're missing the startup cost somehow in here. Let's go back and look. Yes, we 100% are. Okay, so, and I did this in the other template too. So startup costs are going to be their own section. And that must have been late in the stream yesterday when I was getting tired. Forgot to put that in. So startup costs, this million was just nowhere. Because I was wondering that the cash balance seemed too high in the balance sheet. And it's because we weren't looking at that. We were looking at the $1 million or the equity coming in, but we were not looking at the startup costs. And the equity was counting the startup costs and cash needed. Okay, now let's go look at the balance sheet. Okay, we're seeing negative values here, which is right. This makes sense, but I thought it solves for zero position. I guess it could be. Oh shoot. Okay. And this is another thing that'll be different with every template, but this so this capex that's happening, the capital expenditure on the fixed assets, uh This is not in our monthly detail because I added the schedule separately. The sale of the business should match 6512 and these two amounts. So 7636 should be. Let's go over the P&L detail because these have to be intermingled, or these have to be, copacetic. Just want to make sure. Also, we want to make sure this matches our ending cash position on the monthly minus the annual. Should be 0. Good. 2 decimals. So that's another check. But we're going to have to update the items in the cash flow. So first of all, so exit value 7,236,000. What do we have? We have 7,636,000. 7,636,000, 7,002,000. Oh, okay. Another thing we need to add, the sale of the building. So when I put this CapEx schedule in, it has this value, proceed value here. That's not counted anywhere else. So we have to link it up with on the exit months if the exit months. Well, so this is easier because we're assuming if there is an exit, it's the last month of the model, and that's why this is white and hard coded, because we're not doing a variable exit month in this specific template. It's just the 5 years after 5 years. All right, great. Let me see where we are. Oh, it's only 10:30. Let's go add all these items into the P&L detail, and then that will update the equity needed, and then that will go and then flow through to the balance sheet and update that. So everything I just said, we need to add in here. We've got the financing. Principal payments, I believe I did that calculation here somewhere. I know I did it. Or did we? I might have counted it in the annual. Oh no, it's there. Okay, it's here. So let's make sure I didn't do any finessing of this with the debt. I did. Okay, so now that we have that principal amount coming out of here, we don't need it in here. So let's see if this is 0. Yeah, we don't need this. It's just going to be our multiple times the annual revenue times the run rate, a multiple. So 7. Oh wait, it's the same. Oh, yeah, okay. I guess it would be. We don't need the logic in there. It would be because I'm just assuming this is the total repayment. So it's being fully repaid. So either way, it worked out fine. Okay, so this is exit value. I'm actually going to call this total exit proceeds. Now, so when we have startup costs in here, we need, I'm just trying to make it look nice. So financing, principal, interest, we're going to add in, so the value of the building has to go in, CapEx, can't remember, was there another thing? Still can't hurt. So let's put in CapEx, building proceeds. So this is going to be based on we can actually reference the cash flow statement. That right there. Building proceeds is just going to be our CapEx amount here. I also need to make sure, oh wait, yeah, we need to look at this. Where's this building cost coming in? Oh no, I'm on the annual. I need to be on the monthly. Where do we put those rows in? Under interest payments, we put 3. And this is, most of my other templates have a lot of this stuff already in there, so it's not going to be as, wait, it's not going to be as difficult. Why did I put debt service, undo all this? You don't want, debt service is adding up the principal and interest, so that's its own thing. So we want to put this under net cash in. So this is essentially the bottom of my cash detail on this. So under debt service, go 1. Okay, so we have CapEx, building, proceeds, if there is anything there, and then we'll look. I can't remember if there was other stuff. Sale to business, we have these two are in there. CapEx, I think that's it. Drag this over. And the reason we have to have this is our minimum cash balance position is going to be based on this logic. And it's actually very elegant to do that and then roll that all into the income statement in the 3-statement model. It actually works really elegantly with no circular reference errors. Reference that here. And then the only other thing I'm thinking we need to figure out is the building purchase. Where are we accounting for that? Because that's not flowing into the CapEx row. I'm going F3 to F18 on CapEx. Yeah, F3 to F18. And why cash flow statement monthly? We need to remove. I hate references to tabs on the same tab as the reference. Oop. Get in there. Okay, so what's going on with that purchase of the building is the question. We need to figure out where that's being represented at. It's not a startup cost. So I'm doing F3. That should come into CapEx. F3 to 18. Ah, that's because this is still at 2020. Okay. There we go. So now we should see proper Data and the cash flow monthly. Yep, that's there. And now that we don't need to update the capital expenditure here, already counts that. Building proceeds is just going to be 0 until the last month. Now net cash, and let's go plus CapEx plus this. Because I think CapEx had a negative value, I believe. Yep, so we just add it. Minus the startup costs here. Okay. Make sure this is making sense. Our taxes, are we... Okay, so now we can go reference the income statement for actual tax calculations. Thank goodness, no circular reference errors. And it looks like we don't need row 100, hopefully, so far. Oh, wait. Oh, wait, so this is income tax. Gotta get some, update this formatting. Right border, and then we'll do on this net after tax cash flow double bottom. And might as well put a top in there. Now, why did I have this? I did the total debt service in light gray, so it shows the subtotal, but this does not need to be in light gray. All right, now are we all set? I hope so. I hope so. And then we go to the annual, do the exact same thing. Let's see. We don't need 100. Wait. Debt service is in 95. No principal payments. How did I get all messed up here? Cash flows in 89. I'm off by 2 for some reason. That's frustrating. But okay. Just manually do this. So under debt service, this and that. Don't need 98. And hopefully, so this is summing 96. Yeah, this is already doing the offset. So we should be able to just copy and paste that in there. Looks good. All right. Net cash in. Account for these. And then this, we should be able to drop down. Corporate income tax. Nope. So that's let's try it from here. Okay, there we go. Now net cash in, top, double, bottom. Actually, let's just put this as a light on that. Okay. After tax cash. Oh, no, this has got to be updated too. So after tax cash flow, debt service, this here, that. So it's the same calculation as the net cash in, except for we're also doing taxes. Well, why'd this go down so much? Hold on. Because the 2 million in taxes. Minus, all I did is add minus 90. No, this is a positive. Hold on. Plus 97 should be added. Plus 97. Okay. Now let's try that. No, why is this so low? Oh, it's not doing the exit proceed up here. Man, this is why my this formatting is. I'm glad it's getting updated now, but man, this is trying to follow here. So any cash position, good. Let's see, does that match? Miracle if it does. 11,000, 1,776,000. Oh, it does. Wow. Okay. So net after tax, I just did that plus the net cash in corporate income tax. Taxes there, and then this is just taking. Okay, I don't know why. Let's add in this too. Financing, debt service, and then these two. Okay, and then now we've double counted, so on this, we don't need to also add in 91 because we already did. So, good news, this balances out. We'll also put the check on here. It's kind of easier to see the end of the 5 year instead of that. Oh, I realized I'm hungry. I have to eat something. Check. Now, the fun part, to make sure all of what's just happened here matches our income statement and all that, which we will know real quick. So, in cash position. I also want to, let's look at the balance sheet on this. Okay, so here's what you would expect to see. Since we're solving for zero, like the minimum equity needed, so that cash ended up being zero, this zero is what you would expect to see at some point on the cash balance of the balance sheet. So, please. Perfect. All right, we got our zero out there, and we don't need inventory in this. Not selling inventory, it's a SaaS. Um, okay, I don't even know where the heck was I. So that matches. That's very good. So we've accounted for everything. We'll also do. Um, let's check the ending balance on this. 13,019, and that might be. Let's update the rest of this before we do anything, because there could be things happening here that affect that just need to be updated. Let's go. So the cash flow statement is theoretically done. Now the balance sheet, we did the cash, which we got pretty far on. This is all already working. Just the value of that, and then you've got accumulated depreciation. Let me look real quick. What's this? This actually, what do we do the cost basis as? So book value, we're doing balance sheet. This is definitely taking into account depreciation. 5 to 23. Although it's not here. Wait a second. Hmm. It's okay. Minus M4, which is counting the accumulated depreciation based on the months in use. The months in use times the monthly depreciation. So it's manually doing that. Okay, got it. Number of months in use is just the month that is purchased minus L, which is the end month. End month is just either the minimum of the end of depreciation or the terminal value month, which we have in D3, which D3 should equal global control C6. Perfect. Okay, so that all flows fine. And then that depreciation is the total that happened over the life. Now these, why are we zeroed out here? Oh, because a useful life of 2 years. So these are fully depreciated. And then what do we do for logic on value? All right, so we made the basis of gain based on just what was still had a book value at the exit. I see. And that makes sense because you're saying basically you're 100% gain on these because they're fully depreciated based on these useful lives here. So you've got full depreciation and therefore the gain, we're not spreading the gain out. It's just being spread among those with depreciation left. Now, if everything was, well, I mean, usually you'll see at least five. So on this one we did five. There's what, 1 month? Wait, depending on when you buy it, um, it's going to be very likely that you have at least one item that's still has useful life if you have anything here at all. Um, I guess the biggest thing that would be here in a SaaS is if you're not renting your own servers, if you're buying equipment and stuff. And in that case, you would have some depreciation here, and you can group them together if you want to like do. You might have 8 different computers, but if they're all purchased in the same month, you can just group that here so you have enough space. And the useful life should be on computers. I think it's 7 years. Let's double check here. Actually, I'm kind of curious. Useful life of computer equipment. 5 years. Okay. So if you put in 5 years, oop, for all of these, and let's say you start in January. I just want to see if our logic is lagging 1 month. Okay, so it is assuming if you started January 2021, ran it for 5 years, you've got the cost basis is then the book value is in 0. Let's talk through this real quick, see what makes sense. So that means all the gain that's going to fixed assets is just going to be applied to the building. Um, I'm trying to think how, if you were doing tax, like, and this is why taxes are so, like, this so almost arbitrary to try to figure out taxes. So we're applying, if you look at our terminal value, we're assigning 10% to CapEx stuff, 723,000. This doesn't account for the building, so in theory here, it's going nowhere. So you would actually, in this case, you would have to say 100% is going as extraordinary income. Now, does that make sense? Is because this is saying if it's fully depreciated, then no gain can be assigned to it because it's essentially fully depreciated at that point. What makes the most sense here? Like if I buy a computer, use it for 5 years. Let's say I buy a computer for $5,000, use it for 5 years, and then sell it for $100. Then that, I guess my gain is $100, but it shouldn't be 0. Now the problem with this is we're trying to figure out how much to allocate to each individual piece, and the logic is saying if it's fully depreciated, then none. Now the question is there a smarter way we can do this so that because if you assign 100% of this to other comprehensive income, it's essentially saying then all of that money is taxed at the regular tax rate, and none of it's going to the fixed capital gains one. But let's say we want to assign 300,000 to the fixed assets, so 5% of that. Well, we need some way to get that to come into here. And this is kind of a crazy case because even if one of the machines were bought in like month 2, you get all that gain in here and then it works. It makes sense. At least on a, you might be applying this to these other ones too, but if they're all 0, um, then the net gain is still going to be what it is. Like that doesn't help with taxes. At least you just need to get to show up here. So I would say the workaround is just at least have one of these fixed assets in month 2. Oh my goodness, my stomach is growling. But I really want to get through this. I might have to go get a sandwich. So yeah, that's the workaround. Just have at least one. We can put it on this one down here. Have at least one of these be month 2, assuming things are a useful life of 5. It's not, I mean, because it's not really important. Um, if 100% of these, if one of these things is not fully depreciated, but the rest are, the assignment of what gets the gain and what doesn't is not that important. It doesn't matter. It's just what's your net gain, and that's just trying to show the total amount going to assets less any remaining book value of the assets. Okay. I am oh that seems acceptable to me, so we're gonna keep this logic like it is. That seems acceptable. All right, where in the world was I? So we got our cash balance 0. That changed. Oh, because I changed this. Let's stagger this actually because want to I want this to be staggered. Make sure the logic is working. Awesome. So we got our buildings, that's fine. Accumulated depreciation. This is just taking from the income statement, which is pulling from the capex. Here we go. So long-term debt, max cash flow plus. So this is just pulling the total principal less the total borrowed, and then it gets paid back here, and then it goes to 0. Okay, that works great. We don't need to update that. Now, what will probably when I start like zeroing out the exit month and doing, oh, we can't actually. It's the exit month is we could zero out the exit multiple. We could make this 0, but this is always going to be here. Because we don't, if you don't want to plan on an exit, then you're just saying the loan keeps going and just the operations just happen up to the last month. But there's not necessarily an exit or a repayment of debt. So let me see what happens if we zero that out. Does anything change? No, it's still trying to pay that back. Let's go to cash flow. Actually, this is now all pulling from the amortization schedule. So let's go, where's that? Right here. I'm going to go if, so that can't equal NA. So that doesn't matter, but what it can happen is if the exit multiple equals 0, meaning you're not planning on exit, then blank. Actually, we could just say that's NA. Otherwise, pull the last month of the template. So now if this is NA, this schedule keeps going. Okay, good. And we're all good. Our income statement is off by $1 million. What? Oh, because on the annual we didn't add startup costs. The checks are good. If you're a modeler or looking to get into financial modeling, have checks on calculations because it really is helpful to make sure you're doing everything right and not missing references. Okay, so here, common stock paying capital, we're just going to do this is outside investors. And then the second one is founder of this label here. Oh man, I gotta eat. I gotta eat something. And then this is just the first month. Be that, and then here. Clear this. And then this will just equal that. And there's never any like redemption of this. This is just saying what's been paid in. Okay, I doubt we balance. Oh my goodness, we do. That's crazy. Wow, I'm pretty sure I've done balance sheets since I've been working with them since 2012 in a professional capacity on some level, like getting paid to do work on them. I don't think I've ever had a situation where I finished a balance sheet first part and I had the a balance here. That is awesome. Retained earnings. We might have to do some trickery here. Wait. So if global is, which we don't even have that anymore. So really this is just going to equal, this is just nothing. If this equals yes. D54 I believe is nothing as well. So no need to have formulas that are not necessary. Let me just double check. So cash flow statement 32 and 54, we don't need those. 32, nope, nope, we don't need those. We're not dealing with dividend stuff. It's no point in adding that. So this is just going to be that plus the previous month. And negative retained earnings is completely fine. That just means we've had some losses to start, but it's a cumulative figure, and then as you make more, that starts to go positive. Wow, I can't believe we matched. That's so great. We are all matched up. I still am going to do some manual. So this is like the formal check, making sure assets equal liabilities, but I'm still going to check cash balance at the end. Um, well, really, I guess that's all that really, if that cash balance at the end here matches our P&L detail, we're good to go. 7.2. Nope, 6.3. So we got a little bit of work to do there. We might have missed, I don't know, something. Executives, and then we'll have to make sure the executive summary matches. But and then do the annual. We'll have to update the annual tabs as well. But wow, pretty good here. Pretty good. I mean, I might finish this today. I'm gonna go get a sandwich real quick. So I'll be right back. Stand by, guys. 1 second. Be right back. Sandwich. All right, I am back. Got some carbs in me, got some roast beef, some peppers. Feel a bit better now. Let's see how far we can get today. So, where were we? Also, guys, now that I've been streaming every day, it looks like our view counts are starting to go up. You can only talk if you're a member. I'm thinking of changing that to anybody as long as you're a subscriber to the channel. You can talk to try to get more dialogue. But I can't really talk that. I guess you guys could talk amongst yourselves, but I can't really talk while I'm modeling or see it. Um, Actually, no, I could. I could minimize this and put the chat over here. Okay, so going forward, I believe I will do that. So next stream tomorrow, you guys will be able to talk as long as you're just a subscriber for free. Anyway, where were we? So we balanced on the balance sheet on the first try, which was insane. I can't believe that happened. Uh, let's go and do the annual. And this actually, man, this is so nice. Um, Again, if you didn't watch the video yesterday, I figured out a really easy way to import the base template into here without having to re-reference and take out all the workbook references with the find and replace. And it was not super easy. Like there was some planning, but it wasn't like difficult. So watch the stream yesterday if you want to figure that out. But it's uh, very helpful in using an import from a different workbook. Okay, so non-current, this looks fine. These all, now my accumulated depreciation. Okay, we gotta update this part. So this now needs to look like this. And this 5-year SaaS startup model, again, is my most popular template and is my oldest. It was the third template I ever built in my life back from 2016. So being able to do all these upgrades of all the things I've kind of learned and got better at over the past 5 years and put it in here, it's really awesome. All right. This, again, we don't need this in here. What are we doing? Income statement 97, annual 97. That makes sense. Plus cash flow 32. Oh, we don't need that either. And then if this, some cash flow 54. Nope, we don't need any of that. This is just going to be this plus the previous amount. All right. Can't believe we match here. Cash flow statement annual. This should be pretty easy. This actually, let me make sure I update all my labels here. So cash flow statement annual should be easy as well. We just cleared out the second one. No need for that in here. And then, yeah, just sum it. So this is all working already. And we don't need any of the supplemental schedules. All right. Well, now that that's all updated, I can delete all of our excess rows and start grouping everything together. Real quick though, before I do that, we need to check why the P&L detail cash flow doesn't match our on the balance sheet. So I'm going to go first over to here. And net change in cash. So what's my variance? I'm missing something on this 400. And that's just the equity. That's fine. So I'm missing the exit proceeds of the building on here. Let's go over, where did I put that on the franchisor licensing one? Wait, did we not put it in here? Hold on, let's think about this. So CapEx, if I put like $1 here, this should change. $221. All right, let's make sure we have an exit month. Well, wait, we do, because there's a sale business here. So 221,600, and then if we undo that, 222. Okay, so it's coming from somewhere. I need to figure out where that's flowing to because sale depreciable assets. Okay. Yes. Okay, so good news, it is calculated in here. It'll be on this one. Now my question is why so this is 0, I think because we put a 0 on our global control. Let's put this back to some multiple. Okay. If that equals, I think I updated this logic in the other one. Let me just, so if our global control C6 0, well, let's see, are we balanced? The final month, we are. So we zero out the assets because they're getting sold, we're assuming. So this logic works fine, I believe, because we're just assuming the last month is a sale. Otherwise, there is no sale. What's terminal value D6 again? Is the multiple, right? Okay. So if that's 0, it's basically saying no sale. Good. principals were paid. So basically, we're out by this 400,000 here on this check balance on 11/7 matching our, where's our check at? Hold on. Wait. Okay, I see what happened. So now it actually does match. So, and it's because if there is no sale, I need to zero that 400,000 out on the detail. Otherwise, it's fine. So look at our look at the cash balance now. 12,972,594. 12, and then 11,723, which the difference should just be the equity amount of cash that came in. And let's see, how do I want to do this check? I guess I could do it over here. So check on balance less equity contributed. So then this minus the ending balance sheet amount. Oh, that. And then this, if we add in the equity, should be 0. Alrighty, that's a balance. All right, we are good to go. Now I just need to, so see if we go back to no exit. That's I have logic in here that automatically zeroed out those proceeds from, so there's no sale of depreciable asset or anything. So that 400,000 doesn't come into here, but on the monthly detail, it is just hard coded no matter what. So I want it to say if terminal value multiple equals 0, then 0. Otherwise, pull that in. Now we balance again. But before I did that logic, look, if I undo that logic, we're out by that 400. We're not balanced. So that needs to be in there. And we're all good. These valuations can stay. These are just supplemental schedule. I'm going to add a contribution distribution tab with it. It's a little bit more of a formal discounted cash flow analysis. And I just call this distributions. And there will be an index tab as well. I'll add that's going to give detail on all these tabs, like what they are, what's on them. But this is where the discounted cash flow analysis, as well as the, well, you'll see. So this is what it looks like, but we only need through year 5. Whoop. And then, did I do, so executive summary has all of this stuff. Okay, good. I'll add that too. And then I also need to make sure the executive summary balances or matches. So this is logic to say, based on what's the total equity that's contributed up front, which is going to be the total needed for the entire 5 years. This will show when that's used, as well, even in year 0. for the startup. And this is going to be based on the monthly P&L detail, but the total should match the balance sheet as well and cash flow statement for cash distributed or net cash, I guess. It's going to show the total positive cash flows for each year, total negative equity used, and then the actual amount that can be distributed, and then that's going to go to each the investor portion and owner portion, or you could think of this as the outsiders versus the insiders. And then those amounts are going to go over to our cap table and to get IRR for each individual um, party of the investor group versus the owner group. So let's update the labels here. Now this we just want to sum up all of the monthly periods that are greater than 0. And everything is not in year 0, so it'll just be all of these that are below. And if our year, is it row 2, matches the year. Oh, and I don't want to do less than, I want to do greater than for this row. So total positive cash flow on the monthly. This will be the negative, and then I got some nice logic in here that looks at everything and does the calculation. It took me, this was actually very complicated to do. Not the part I'm doing now, but these lower calculations. These three, and it was really just this one. Trying to figure out how to make this work and balance out and make sense and not be double counting or counting things right. It was not easy. Oh shoot, on this franchisor one, did I not? I don't know why I left these in yellow. Let's get that into the right convention. I also wanted to do a double bottom on these. Is this double bottom? Double bottom. I don't know why that looks odd. Okay. Uh, so that's the oh, this is discount. No, I don't want to do the discount. Undo, undo, undo. This can be light gray for the project. I want to do the same formatting on the SaaS one. And then this is the actual cash flow going to the investor group, so top and double bottom on that. And then actual cash flow going to owners. Because I want it to be clear what is discounted and what's just the actual cash flow. So those are the cash flow. These are discount values. We can just do light border, light bottom. And then this is also a cash flow item, so we'll do the darker one. Okay, that I think looks better. double. And then this can be light. Now it's going to be interesting. You'll see how I integrate the cap table into here, and then how that flows back to the cap table. All right, so we did the top two. This is just logic. This is fine. So remaining equity, this needs to be, this is going to be the total contributed capital. And then, and this is the same. Now, sometimes these are different if there are period zero, which honestly in every model except for this one there is. So they'll be different based on the equity contributed up front, and then what were the startup costs, and then that'll be the difference. And this is just going to be negative total contributed capital. Okay. So there's the cash flows. Those should match. We'll check those in a second. Let's make sure this. So the share of investors total is going to be on the cap table. Their total share, fully diluted ownership, 13.75. Owners get the rest. This is just 1 minus this. Net present values calculation's good. That's good. Okay. So there's contribution distribution schedule, and then we'll pull this back over into the cap table, and this is only 5 years one. Update the labels. And you'll see when I'm done, I'll also go through and try to do a find and replace for anything that says .xls, and that'll show me any references to other workbooks that need to delete if there are any. So that's really important to do, just to ensure that you don't have reference errors to other workbooks, which you definitely do not want. All right, we're only going to R now. And after this, we're going to see what else we got to do. I don't know off the top of my head. What are these checks? Yeah, this has to be distribution C9. Oh, well, that doesn't match. Those are all off. I think because I haven't updated this yet. So let's get rid of that. So this is showing the share of each entity of the investor pool, how much they're getting based on their fully diluted ownership. And we'll run a check on that to make sure at the bottom to make sure it matches the total distributions. And if not, well, you probably assign more equity than 100% or less. then this checks the top project level, and then these other two will check to make sure the total going to the investors matches. Now, why does that should match? That does. So what happened to the? Why is this one negative? One. Oh, this is checking owner. So first one is 130. Summing up all of this based on. Oh, wait a second. Let's check how did I do this exactly? I did J11 percentage times C9, and the percentage times C9. That's right. 139.78. All right, let's go. It might be just a rounding thing. Yeah, it is. So this is 139.78. So it matches. Um, when this happens, you can always just do, instead of equals, you can do a minus and check that it's zeroed out. So put like a number format. Okay, good news is all these check. This is a check. So we're not distributing more or less than we have. Now, in this case, we probably need to give the owners more because they have a negative internal rate of return. They're probably not going to like that. Let's just increase this. Let's say this is 15 and 20. And now that's, so we did 45, remaining is 55. So we can do 50, let's say 25 and 30. Because I know that wasn't, yeah, so see this negative here. That means we're not in balance. Now we are. And investors should be, okay, now it's positive at least. And again, my numbers are completely arbitrary here. It's all made up, but I just didn't want to have a negative internal rate of return on these when I'm doing screenshots. Well, we're chugging along here. So we've got CapEx is all done. This was working just fine. Let's go put a multiple back into here. Okay, good, good. I think we're ready. Oh, wait, let's hold on. Let's go back to distributions, make sure that's completely good. Also update the color here. Yeah, this is good. Let's do some checks now. So let me go to the franchisor, make it consistent. So this is what I did on that. So here we want to go, wait, what kind of reference error? This is going to be, I believe, balance sheet, cash flow, the ending amount. And then why can I reference error? I think this is just summing up the total. this total? Yeah, let me double check. Yep, and that makes sense. So this is saying the total cash flow distributed is equal to available cash flow is equal to the cash balance available, which makes complete sense. Now, and if we talk through that, let's see. If we talk through that, it makes sense because you don't want to add also the equity contributed here, because now you're saying um, that's a negative cash amount, but you're trying to check against the cash balance, and this is cash that was put in that's never taken out of the business. So, so the cash balance on the balance sheet is going to have this as a positive, but it's also going to look at all the net negative values, and since those zero out, this is the only thing we're really looking at. And so those should balance, which it does. That's a check. All right, so this matches the cash balance of balance sheet. Our monthly and annual P&Ls match. Uh, I tested different assumptions with the exit multiple, like no exit. That worked fine. You can change the start year, company name. I mean, I think we're almost there, guys. We are almost there. It's just a matter of put in the index tab and oh, okay. So now I believe we can format this. So let's delete our unused rows, and then we'll also group. Clean this up a bit. All right, all those are grouped. That's good. Make sure this is actually right because global control C5 and C6. Yep, start and end. Okay, that's good. Uh, income statement annual. Oh, nice. This is already grouped. And the grouping is cool because if you just want to see the high level line items, you can hit the one, and now you can see almost everything all at once. Nearly. All right, balance sheet is not. Oh, shoot. We have a error. Probably something referencing, if I had to guess, the inventory row that we deleted on the income statement. If I had to guess. Uh, we'll see here. Hold on. Okay. Yeah. So other operating expenses, this one we don't need as a reference. And this is why I try to remove all the unneeded references. And I think that was our only issue. I hope. Yep. Okay, good. We're back. Delete this. And we're grouping. where's my check at? Where'd the check go? Uh, 35. Do we have it? Oh, ah, got another reference on this, so we don't need to calculate that row anymore. Oh, come on. This equals this. That's it. I guess we could put a grouping on that as well. Okay, there's our check. And if we want to try to see everything at once, you can almost, you have to zoom out a little bit. There it is. All right. Unhide. Balance sheet annual. We're also going to have to remove this reference. Oh, shoot. What happened here? Our monthly's fine. H lookup goal control C6. So 5 to 15, I must have deleted some. Oh, yeah, I deleted that. Okay. Hold on, let's undo because that's probably not worth as much hassle. We're going to leave that space in there. I just got to redo some of this work, but that space is fine because all of our H lookups depend on it. Okay. And then go over to our balance sheet annual. We'll keep that space, but we do want to group it. And this. We're getting there. Let's see how that looks. Okay, looks good. Let's make sure we're at the top right on all of these. Also, this needs frozen. How'd that get unfroze? Okay, balance sheet, monthly and annual is good. Final thing is cash flow. sure that didn't mess up anything here. Nope, we're good. Awesome. Cash flow, monthly and annual, balance sheet, monthly and annual, income statement, monthly and annual. Let's see, we got distributions, executive summary. So here we need to add a couple cash flow items. Which would be if we go to our P&L, annual detail, it's that CapEx and building proceeds is the only thing. Now on this I have everything as a positive value, so I need to put that as a negative. And minus this plus this. Oh, and startup costs. All right, now this total here, 11,723, should match this, 11,723, 715, perfect. Then we have some KPIs here related to the SaaS business. What else? I mean, I think we're good to go. Uh, I think we're good to go. Everything is balancing, tested some situations with the timing. Oh, so this discounted cash flow analysis is not relevant anymore. We've got a more advanced and cleaner thing on the distributions. This needs to stay because it's referencing to get our correct exit value. Okay, good. This is just a sensitivity analysis. Let's get everything up to the top left. Freeze. All right, what an update to this thing. I feel like, I don't know, a factor of 10 times better than it was. Um, so I'll do an overview video that's just like 15 minutes that goes over all the updates and everything that was added to this, and then I'll post that to the SaaS landing page. But man, this is awesome. This really gives more depth and just clarity to the model. Just making sure everything's to the top left. All right. So, yep, all I'm going to do is add an index tab that just explains each tab, and I'll do an overview video, but this is ready to go. So it will be available if you go to the SaaS tab at the top. It's the second one down, standard SaaS, and I'll do the overview video up top here, and it'll be available for purchase probably by tomorrow. It's also the top selling template. I've had 158 sales. If you have already purchased this, email me and I'll send you this updated version, no charge. All right, that's all I got for you guys. Don't forget, check out, I've got all kinds of models here, hundreds of different templates, all different industries. We'll be working, I guess tomorrow we're going to start on the equipment rental integration of the three-statement model, and that'll be a good one. Probably maybe finish that by the end of the week, and we'll keep it on. Don't forget to like, subscribe. It's a free way to support me. Helps with the YouTube algorithms, and I will see you guys tomorrow morning at 10 a.m.